Hello, everybody. Welcome back again at the Web3 Business Podcast brought to you by Tokenized, the show about expert level information on blockchain, RWA, AI, metaverse, and Web3 in general. My name is Rob. I'm joined here as usual by my colleagues Edgar and Kay. Welcome, guys.
Hi
Hi,
everyone.
hi everyone.
And we have a guest today, Edwin, who is the co-founder of Bricken and an expert on RWA and tokenization. Hello, Ed.
Hey, hello everyone. Thank you very much for having me here.
Thank you for being here. Edgar, I think you had the first question to kick off here.
RWA. So, how does Bricken ensure that the authenticity and the legal compliance of the assets that are being tokenized?
Yeah, so on our end, we're a software provider in the sense that we provide all the infrastructure for our clients abroad the world to be able to tokenize their assets. And the client themselves are the ones that have to be compliant with the issuance regulations. While technological wise, we provide them with models for them to be compliant. Some of the bureaucracy needs to still be handled offline. So for that reason, we're just a software provider. We tested our technology in the Spanish sandbox because here in Europe, every country has a sandbox ecosystem for testing new technology. We were with the Spanish sandbox in 2021, and right now, that's how we know that we ended up being just a software provider because after 6 months of development alongside the Spanish Security and Exchange Commissioner, it came out that we are just a mere software provider. The same way you can issue securities or whatever you want, or even normal utility token without the software. In the end, we're just a tooling mechanism, and it is the client who does the issuance who has to be the one who has to be compliant. And that's how we tackle regulation abroad the world. And that's what allows us to have now 238 million tokenized in 14 different countries because we're agnostic on the asset. It is the client who realizes what they want to tokenize, and we're agnostic on the country because it is the client's obligation to be compliant with the regulation from the country they're issuing the digital asset from.
Okay. So basically, you just tokenize, do the tokenization, and the asset owner will be the one handling the legal compliance that they need.
Yeah, but not even we don't even do the tokenization. We provide the whole infrastructure for the client to do the tokenization on their own. I don't have access to the digital asset they tokenize, the wallets, investors, nothing. I'm just software, so I don't do the tokenization.
Oh, right. I understand. Interesting. So, yeah. One other thing. So you don't do the tokenization, the actual tokenization, right? So, but does Bricken support multiple chains or?
We right now live on 4 different chains. We're in Ethereum, BNB, Base, and Avalanche. We're integrating as we speak Polygon and Arbitrum for this quarter. But in the end, the client doesn't even care about the chains. We can have 1,000 chains, and the client, who is mostly Web2, they just want to tokenize. So we're doing a lot of chain abstraction and then just going with the most efficient one that for us right now is Base. So we're pushing our clients to use Base just because of the gasless transactions that USDC means. But in the end, the clients, they could care less about the chain.
Okay. Yeah. I guess that's it for now. For my questions. Thank you.
Yeah, that's quite interesting. Kay, do you want to jump into that?
I'm thinking about trust since you've mentioned that you're a platform, and for example, I am the a project owner. I want to tokenize my assets, so you'll just provide me the platform, and I'll do the tokenization myself. So in that case, do you think you still need to establish trust here? As you know, trust is very crucial when dealing with RWAs, right? So, and if you do consider that, what strategies does Bricken employ to build and maintain trust, not just with your investors, but also with the asset owners?
Yeah, I mean, trust is regardless of what you do in as a business, trust is a foundation. So you don't even need to be in RWA to provide trust. Every single business out there is relying on trust. So for our clients to really capture capital or investment, they need to be as trustful as possible. So We have clients since you have a reporting tool in our platform where you can upload documents to be verified by third parties. Some upload annual accounts that are audited by some official auditors. Big Four. We have a client who uploaded documents by Deloitte. So, in the sense, it is the obligation of the issuer to be able to supply information to the investor that allows it to be invested. I mean, it's not even about the RWA. I'm a startup and I want to raise money for venture capital. I have to provide as much documentation or information for them to be able to say that I am who I say I am and that my business is who what I say I do. So in that sense, you can provide to your investor zero, and maybe somebody will invest, or maybe you can provide all this document, and maybe some other people will invest. Right now in crypto, we have a big problem, right? Because people invest in meme coins, and that's nothing. So trust is not even important anymore. I mean, some people want to just invest because they want to invest. So we're in pure speculation phase. So it don't matter. I mean, in the end, for me, the only thing that matters nowadays is marketing.
Like the return, right? Usually. So regardless of what project they're investing in, oftentimes they just wanted to know how much the return would be.
Absolutely.
All right. And of course, with that, do you extend any marketing efforts for your client or for, for example, I'm the project owner. Do you also extend some marketing efforts there, or you just provide your platform and it's up to the project owner how they're gonna do the marketing efforts themselves?
Yeah, so it is like you said, we just provide the software and it is the marketing efforts to them. We do help in the sense of unofficially we have some guidelines and whatnot, but how we solve this is we created a marketplace of service providers such as law firms, marketing agencies. So if the client needs some service that we don't provide because we're not providing per se directly the service of marketing or legal, they can go to our marketplace and hire whatever they need. So that's how we give them the technology layer, which is us, and on top the service layer is provided by any of our partners, which right now we have a vast majority. I don't know, we already surpassed 100, so I don't know where we are right now, but that's a lot of law firms and marketing agencies and supply to our potential clients so they can know what to do next.
All right. Okay. Yeah. So that's it for my end for now. Thanks. Thanks, Edwin.
Yeah, so from my side, you mentioned, Edwin, that your platform obviously is more technology focused, but I'm sure that you're obviously working with your clients, and you have a little background yourself. So what kind of challenges do your clients have when it comes to compliance, and what kind of solutions are out there that are usually used on that side?
Yeah, I mean, in the sense that it's fundraising. So there's a lot of ignorance in the market because apparently you cannot do anything that is issue digital asset, right? But that's a lie because in the end, capitalization has occurred for thousands of years. I mean, that's an exaggeration, of course, but if you're a capital market, there's a difference between private markets and public markets. If you want to do a public issuance, you do an IPO, regardless of how you call it. If it's tokenized, still an IPO, initial public offering. And that's the highest bureaucratic one. And that allows you to go to a regulated secondary exchange that allows you to do all this trading. But there's a simulation that just because you issue a token, you have to go through that path. There's still private markets. Sometimes clients don't have to do absolutely anything to get capitalized via digital asset. Why? Because they're hitting a private market with private investors, allowing just they have the decision making, who can invest, who cannot. I mean, that's the private market, and basically that's what I'm trying to say. Like, there's in the market, there's these narratives that absolutely everything goes under capital markets law, but not. Sometimes it goes under corporate law, and when it goes under corporate law, it's way simpler. Because if that was the case, that everything was as complicated, then how do any project gets funded in the world? It would be impossible. Because you were starting a startup with 50K, family, friends, and office, but now you have to spend 50K on a law firm to capitalize against with venture capital or family, friends again, or retail. Don't make sense. So I believe that actually things are way simpler than people think, but way simpler. So when they come to us and we explain them, hey, you only need this and this, which is the reality, and then they're like, oh, but I thought it's like, yeah, that's the problem with bad marketing. Some experts out there saying that things are not how it is, and they just started all feeding on the same thing. And lastly, why did this came to be? Because blockchain lawyers, who apparently just went out of the blue saying, "Oh, I'm going to tackle this," they never came from capital markets law, right? I mean, capital markets it's a very delicate vertical out there, kind of like every single system out there has specific verticals. The problem is that the people in blockchain never did an IPO. I have talked to so many lawyers who call themselves blockchain tokenization experts, and none of them have performed an IPO. So it's like, where are you learning what you're saying if without technology you never did anything of the things you're saying? You're actually feeding bad information to the market because you think you know, but in reality you never tested. So that's why to provide to an answer, there's no magic, there's no complications. If you're doing private sales in private markets with your investors and you know who they are and you whitelist them and there's some blocks there, you don't need a lawyer. If you're doing something that is public markets, in a public markets, regulated secondary exchange, initial public offering, it's not that you don't need a lawyer, it's that you need to have a lot of money, a lot of auditing, a lot of things, because you're gonna do an initial public offering. How many companies do an initial public offering per year? I mean, that's crazy. Not I don't know. I mean, United States, a lot. But just so you know, the data in Spain from 2022 to 2023, half of 2023, 0 IPOs were offered. It's not a market. It's a market for central countries and for central companies, but not at the ratio that people think.
Yeah, yeah, exactly. So is that also the challenge maybe you encounter with your clients? Because I would love to understand it better, right? In terms of like what solutions they're looking for. Is it mainly using the tokenization to access capital markets, which again doesn't necessarily do that, but what kind of solutions are they looking for when they're tokenizing their assets on your platform?
Yeah, I mean, in the end, pure reality, and unfortunately, yet everybody comes from the capitalization phase, right? So for them, tokenization is crowdfunding. From the startups point of view, they don't understand all the greatness that it can bring. Because, for example, if you're capitalizing without technology, and let's pretend, I mean, Germany and some guy, let's put it, I don't know, Colombia, why not? If the Colombian peso has to be transferred to euro via SWIFT, bank to bank, you lose 7%, sometimes even more on the transaction. So you're never gonna get funded by somebody in Colombia for 100 euros or 1,000 because it's not efficient. It's too costly, right? I mean, cross-border payments, it's one of the reasons why financial instruments in blockchain make it more efficient, just because of the cost. Not only are you buying euro at the worst rate, you're losing on the transaction because it's a SWIFT international payment, so that's already a charge. And then maybe in your bank of destination, there can also be fees because there's just fees everywhere alongside that easy SWIFT, right? So what I'm trying to say is not only the greatness of tokenization is that it's gone, because you can transfer 100 USDC in base from Colombia to Spain and it gets, or Germany here in the example, it gets fully, but also reconciliation phases. So for example, you want to go and say like, hey, I want 2,000 investors. You know, the manpower, obviously, no, it's not that much, but maybe one person just specialized on receiving 2,000 bank transfers, getting 2,000 agreements out in place. And this is a reconciliation phase where you have to establish how much money you need, how much money they need. And that's kind of like 2,000 operations. But not only that, then you have earnings. You provided a loan agreement with 15 APY or 12 APY to make it simple. And then you have 1% to distribute every month. Now imagine yourself distributing in the non-tokenized blockchain way, let's say 10 euros per earning. If you're doing it to bank, 10 euros for earning from Germany back to Colombia is not doable. It's impossible. You wouldn't even do it. Your bank fees are higher than what you're trying to send. So that's another greatness of blockchain. So you have all these kind of like processes that are in the back end solved, and that just makes it more efficient. So the reason why they come from capitalization and then they stay is because they never thought about the rest of solutions that it provides using a blockchain infrastructure. They come for something and then they just stay for, oh, I didn't know that. And then you put a simulation. It's like, try it yourself. Try to get 100 euros from from a different continent. See how much you need to pay. See how much is that possible. It's not doable. So I mean, in the end, it's not just capitalization. There's a lot of management. There's a lot of things that they need to be educated. And that's the problem with marketing, with current state of tokenization. Nobody's doing marketing about now more. But when I started, it was merely crowdfunding and what is it, like when you divide everything into little spots, and fragmentation and democratization. But that was not the reality. I mean, in the end, it's not the greatness of its efficiency, its optimization, its feeless transactions, no intermediary. There's a lot of savings that can happen via tokenization, but nobody was talking about that. So here we stay with bad information still in the market, and that's a shame.
Yeah, so that's a communication problem, and I like the way you're explaining this, very simple and to the point. That indeed it's usually used as a crowdfunding solution, but it's more international compatible because of crypto being an international currency, and then obviously the huge efficiency gains when it comes to also smaller contributions or things like yield distribution. How does it work, right? So you mentioned this example for a German company getting an investor from Colombia, for example. Using your platform, which parts obviously are automated, which parts do still need to be done when it comes to, let's say, a company shares arrangement? Do they still need to sign something, or is it all through the blockchain, signature through the wallet? Like, how does the process work?
Yeah, actually, everything is done now through the wallet, because when you wallet sign transactions, you do sign, right? So this is funny because I used to work in electronic signatures, right? I was working for the biggest competitor in Europe of DocuSign. It was called Signature, but that's regardless. And basically, when you sign, some documents need to be, like, verbal agreements are compliant, right? So if I say right now to you, hey, here's 100 euros and I'll give you 10 euros on top, and you say yes, that verbal agreement is still an agreement and it's viable. And then you go with the next one, which is either you handwriting or you electronically signing. But signatures are valid. So you can use the signature of the wallet to sign transactions that are agreements. So in the end, everything that we're doing is optimizing the whole phase. For example, in our end, the tokens inside, they're embedded via IPFS, the agreement of the subscription agreement. So when somebody buys a token, they're actually signing also the subscription agreement. All of this is explained and everybody can understand that there's no weirdness there. But that's the beauty of it. You are efficiently in one transaction of purchase, not only purchase, but also signing. And that just reduces the friction of having to send a contract via DocuSign platform. The other one has to, you can do everything on the spot. So everything that we're doing about all of tokenization is to try to technologically wise do as much processes or back office as possible, because the goal of the company, without talking about blockchain, is this Google sign, Visa, MasterCard payment, so to speak, get digital asset. Right now it's not as simple, because when we reduce the process of, for example, the signature, we have other processes that right now the state of the art of blockchain are not so simple. Now we have MPC wallets, we have a lot of great things, but we're not there yet. But once we get to that, I think blockchain as a conversation will stop being the conversation, because it's just mere backend. If you can process and do as much onboarding of processes and operations technological, then people stop asking how does it work. They just click, perform, and they're good to go.
Yeah, it's really the automation of the financial process in the back end, and in the front end for the user, it's almost like it's going to be almost like a Web2 experience, although that's obviously not fully the case. It's more an advanced experience, but they still need to do things like KYC and other things that maybe is not usually in crypto the case when you talk about utility tokens, right? So there is a KYC part in your platform, right?
Yeah, absolutely.
Yeah.
Yeah,
Okay.
I pass a KYB to the clients. I don't need to, but I also don't want bad players. I just requested some company information. It actually takes away a lot of the bad players. So, I mean, in the end, if you want to look for legit capital, you do the extra effort, right? So, we have a normal standard KYB, nothing that a bank wouldn't request to open a bank account, but that deters a lot of the bad players. And then basically for investors, so all our clients, when they onboard the investors, they pass a KYC, but that's for anti-money laundering compliance. So we also help them on there. So yeah, I mean it's we try to bring as much compliance as possible, but also for our investors, because they don't know they need a KYC, but we know they need to KYC their investors. So we help them there, and that's it.
Great. Ed, Kay, do you guys want to jump in on any of this?
I'm sorry?
For my end, no. No, I don't have any further questions. Thanks, Edwin.
Yeah. So I do have regarding the KYC. Did you implement your own KYC, or you're integrating some other third party service for that?
Yeah. So we use SumsUp as a KYC provider, which
Okay.
is one of the biggest ones.
Oh, okay. So also the project owner will be the one to accept if the investor is a legitimate investor, right?
What we do
KYC.
provide is only positive KYCs. They don't see this, but it is with us. So we have an internal legal compliance team. Basically, we have a bunch of guidelines that we created for these kind of like capital markets KYC and what is needed, because there's some things and tweaks that need to be done. We passed them up to SumsUp, and we created our own model. So when there's a KYC, an investor passing, they get verified. We review sometimes, because sometimes there's false positives or false negatives, so we have to check a little bit. Every day, our compliance team is reviewing all the petitions, and then whatever get passed, the client gets, like, I won't say 100%, because we know that sometimes even tech can fall. It's a 99% of the KYCs are clean KYCs always. So there's no blacklist, there's no PEPs, there's not a lot of things that couldn't pass a KYC, because we don't want our clients reviewing the KYC, because probably they will lack the know-how or expertise to understand what can pass and what shouldn't pass. So we only provide them clean KYCs, and then they have to decide if they allow them to invest or not. So they have to whitelist them. So they get the clean KYC saying this person can truly invest, and then they get the decision making if they wanted to invest, with all the information that we provide them to them, such as the country, the name, hey, they have this, they're this, and they're like, okay, perfect, clean, yes, I'll invest, or no, because I don't feel confident of that person. They always get that decision making, but at least preemptively we already help them pass the KYCs.
Oh, okay. So basically, is like a layer where you filter all the investors before you pass it to the client.
Yeah, they pass it on. So for them to pass the KYC, it's in the website of the client, because we have a model that gets connected to there. So it's in the website of the client's experience that they pass the KYC. The petition gets through us. They don't know we exist. Then we throw it back to the dashboard of the client. They accept, and then the investor invests in the website of the client. So on the end, that's why we are hidden, because Bricken is just a software provider. Think of it as Shopify. If you understand what Shopify creates as an e-commerce and how it is structured, that's where we got the idea of what we created now. Instead of creating e-commerce store, we decided to create sort of like the token stores.
Okay, understood. Thank you, Edwin.
No problem.
Yeah, we're almost at the end here. There's a couple of quick final questions here, Edwin. So for some of our listeners that might be interested in doing a campaign with you guys using your technology, what kind of marketing is usually done for these crowdfunding campaigns? Because again, we're talking about security tokens here. So what is usually their route on that sense?
Yeah, it depends on the project. All right. So what I'm saying is, for example, we had a Web3 company tokenizing their equity, Hacken, security firm. So they went full Web3 Twitter, right? So guerrilla marketing and all the greatness of Twitter marketing. That's how they picture. But we have another one doing renewable energy, so they target LinkedIn and they target PRs. So in the sense that you need to understand what are you offering, so you trigger the interest of. We had another company doing biotech. They only market via email. I mean, they say because that's where the listeners are. So, I mean, as a company, you have the obligation of understanding who your buyer persona is. If you understand who your buyer persona is, then you will understand who's your investor, right? Because you're selling a product that somebody might want instead of buy, invest. So, when you do tokenization, don't go crazy and say like, oh, now I'm going to do a Telegram group. Why? I mean, maybe you're trying to hit only guys in suits. They don't understand what is Telegram yet. It's very still niche for our sector of Web3. So don't create a Telegram group just because you think that now in Web3 everything has to be Web3. No, I mean, talk to them. I mean, maybe you want to organize a nice lunch in a restaurant and invite 20 people. That's still doable. I mean, is it old school? Absolutely, but that's your buyer persona. Respect your process. Don't change just because you're adding a technology layer. In the end, you're trying to be more efficient with that technology, but your buyer persona is still the same one that you have to target. So to answer your question is the way to get tokenized and get crowdfunding is understanding where your investor lies. And to understand where your investor lies, you should know where your buyer persona lies and use the same process. If it's LinkedIn because you want to be super corporate, go for it. If it's email marketing because you have a huge database of potential buyers, then turn them into investors, go for it. If you have Twitter presence, use it. If you're in TikTok because you are, I don't know, like I'm saying, some cool product for Gen Zs, just TikTok. So don't try to change or establish yourself as different, because if you're selling biotech on Twitter, on TikTok, sorry, so to speak, I don't know if you're gonna get invested probably, but I highly doubt that's where you're gonna get your mass. But hey, I could be wrong.
Yeah, that's an excellent point for people to realize. Look at the investors opportunity you're offering and look at the persona that fits this kind of opportunity, and don't make it necessarily the crypto audience just because you're using this technology. Then final question regarding, you guys are based in Barcelona. How is it in the Web3 space in Barcelona? I know there's some conference there soon as well. Is it alive there? Are there a lot of other tokenization or Web3 companies there?
Yeah. So when I started in 2020, there was a lot of startups in getting funded or getting ignited in 2020. We are one of the few survivors of blockchains in Spain. I don't know how many companies there are, but I wouldn't even lie to you if I say like there's only 10 companies in the whole space now in Spain on Web3 and blockchain. Because now the new fashion is AI. For me, it's perfect because now Bricken is well recognized. Everything that happens in the space, we get contacted because we do have a nice brand awareness and position in the space. So we kind of like just move around how we see fit. There's very few startups being raised or created on Web3, but we do have a lot of people living in Web3 in Barcelona or Spain as digital nomads working for other remote companies. So regardless, there's still a good presence. We do have the Blockchain European Convention, which is a nice event. Last year, they had Avalanche event in March, I think, and then they also have in July, I think it was SmartCon of Chainlink. So still a beautiful country, which allows us to really capture some outsiders. But per se, on a daily basis in crypto, there's not really a lot.
Yeah, interesting, definitely. Yeah, so good to hear that, and thank you so much, Edwin, for this amazing podcast. Thank you as always, Gay and Edgar, and for everybody watching and listening as well. Goodbye, everybody.